Hello everyone, welcome back. My name is Arias, and today we're going to be talking about why I think Lemonade and Arcturus are both extremely undervalued using fundamental business metrics for 2022. Don't forget to like and subscribe if you enjoy this type of content, and leave any video suggestions and feedback in the comments below. And without further ado, let's get into it. Before we get started, I'd like to say that in my opinion, there are much more important things that matter when choosing what businesses to invest in rather than just the raw numbers business case. In my investment process, before I even look at the numbers of the business, I have to both think that the business is providing real differentiated value to the customers and believe in the management team. Only then in my investment process do I wrap my head around valuation. That's all to say that you should make sure you understand the business case for both these companies first and foremost. What are their technical advantages, what is their long-term vision, and what makes their product superior to their competitors? Once you understand the business, then look at the numbers, because only then can you really discern whether or not the numbers you're seeing are realistic. And of course, none of this is financial advice, so please do your own research, but you could start with the videos I made to introduce both Lemonade and Arcturus, and I'll link them below. Now, starting with Lemonade, you may have seen this slide from my portfolio reveal video, but I thought I would reiterate these points because I think they're pretty impactful, and I've also updated it so it's more accurate as well. One of those changes is I took another look at Lemonade's balance sheet, and they have $1.3 billion in cash and equivalents rather than just the $1.1 billion that I had listed the other day. As of market close on Tuesday, Lemonade is still trading at roughly a $1.8 billion market cap, effectively meaning investors are assigning just a $500 million value to Lemonade's business going forward, as that is the difference between the company's value and their cash they have on their balance sheet. That is absolutely ridiculous in my humble opinion, and we'll just have to wait and see how it will play out over the long term. Another thing that came up when making this video that I have to comment on is Lemonade's management team did an excellent job timing a massive secondary offering in January of 2021, right around the peak of Lemonade's share price, to give them an absolute war chest of cash going forward so they can continue to invest aggressively to maximize future growth without regard for the market conditions, as they will only go back for more cash now if it is on extremely favorable terms. Now let's talk about the Metromile acquisition, which is becoming a better and better deal as Lemonade stock continues to get pummeled. Another thing I went back and changed is Metromile actually has more like $250 million in cash and investments on their balance sheet, rather than the $200 million I listed in the portfolio video. If the deal goes through and Lemonade purchases Metromile for about $195 million in an all-stock deal, they will be diluting shareholders by $195 million, or about 6%, to raise $250 million and get all of the other assets that Metromile has, like billions of miles of driving data, car insurance licenses in 48 states, seasoned algorithms to improve Lemonade's car insurance ramp, over $100 million in the end of year 2021 IFP, and perhaps most importantly, additional talent to help ramp Lemonade's car insurance business. This is an excellent deal in my opinion, and I can't wait to see some of the financial benefits start to play out. The final box on this slide hasn't changed, and if you're interested in learning more about that calculation, I'll refer you to my portfolio reveal video, and I'll leave the timestamp of that portion on the screen and in the description. Moving on, let's calculate a similar metric of price to IFP ratio for the end of 2022, just to make sure I'm not missing anything. To start, Lemonade has given guidance for $380 to $384 million in end of 2021 IFP run rate, and I took the midpoint of that for our analysis here. Metromile's last guidance was given in the Q2 report, and it was for $115 to $125 million in end of 2021 IFP run rate, and I took the midpoint of this as well, although it should be said that they officially withdrew this guidance after the acquisition was announced. Now, let's project out next year's IFP so we can look at the IFP ratio for next year. On the right side of the screen, you'll see how I projected Lemonade's number forward, and that was taking the midpoint of their guidance for 2021 and having it grow at 70% year over year, which is roughly what analysts on Yahoo Finance are expecting, to get to $649 million in end of year 2022 IFP for Lemonade. The analyst's 70% number probably includes some of Metromile's IFP. However, I think they are underestimating Lemonade, and I think Lemonade proper's business will grow at a 70% rate, and so that's what I've used. Next, to determine Metromile's IFP at the end of 2022, I used some of their old guidance numbers, which would imply at least a 15% quarter-over-quarter growth for the first 2 quarters of 2022. I extrapolated that out to Q3 and Q4 of this year, and that would give $859 million in the end of 2022 IFP for the combined company. The combined fully diluted market cap would currently be about $2 billion. If we divide that by our $859 in 2022 IFP number, we could get a forward price to IFP ratio of just 2.3 for a company that I think will be growing at over 70% year over year in an absolutely massive market that has been relatively unchanged by technology, and who just launched what will be their highest grossing revenue product over the long term. Seems a bit off to me. To give you something to compare to, Progressive and Allstate have PES ratios of 1.2 and 0.64 respectively, as well as growth of 10 and 3.9% year over year. Now I know a PS ratio is not directly comparable to forward IFP, but I'm going to use it anyways because Lemonade is clearly growing, and if we let it run out a year, it would be comparable to traditional sales metrics. If my projections are correct, it would mean that Lemonade is currently trading at a price to end of year IFP ratio of 2.3 with crazy growth of 70%. I think that's insane, but let's look at how the exponential growth Lemonade is putting up helps make these numbers even more ridiculous. I think these numbers will end up being more like 60 and 50%, but let's say they grow IFP just 50% in 2023 and 40% in 2024. That would mean if we fast forward 1 year from today and the stock still is where it is now, we would be looking at a priced end of year IFP number of 1.6 with still plenty of headspace left to grow. If we fast forward another year from there and are projecting 40% growth for the coming year of 2024, we would be at a ratio of 1.1. That's a little bit lower or about the same as Progressive, and they're only growing at about 10% a year or less. Whereas Lemonade would have just grown 70, 50, and 40% year over year and has no end of growth in sight. Personally, while it has been painful in the past few days, I love this setup long term, especially compared to some of the valuations Lemonade was reaching early last year, and I can't wait to see how it all plays out. Of course, we should all stay focused on the long-term vision for Lemonade, and if you want to see a video going over my valuation model there, let me know and I'd be happy to do so. Now, moving on to Arcturus, who has one of the weirdest trading days on Monday that I've ever seen, reaching a new 52-week low down 12% and then proceeding to rocket back up 16% to finish the day up. It also had a rocky day on Tuesday, but despite the markets being down, it finished up 1.5%. In my opinion, this was based on a preliminary data report that said ARCT 154 and 165 increased neutralizing antibody titers when used as a booster after the Pfizer shot. New data was released today, Tuesday, that stated an even more robust antibody response against Omicron. Both of these data sets are taken from a trial with 5 microgram dose, clearly demonstrating their star mRNA is working to perfection. But with the market still digesting this and Arcturus not yet sharply higher, let me explain why I think they are still criminally undervalued. I will talk you through 4 cases, 3 of which they reach vaccine production, and a 4th is if they do not reach vaccine production. And then we will weight them and find a fair value for the end of next year, starting with the bear case where the vaccine does still go into production. For this one, I modeled out Arcturus selling 100 million doses. I think this is still pretty conservative because it is lower than the hundreds of millions of doses that they said they would have production capacity for, and it also doesn't take into account any stockpiling of doses that they may have done in preparation for approval. Let's say they sell them for $10 a dose, which I also think is fairly conservative considering Pfizer is charging close to $20 a dose and Moderna is charging over $25 a dose, both for their mRNA vaccines. This is closer to the number AstraZeneca and J&J are charging, and I think this would only have to be if Arcturus was selling their vaccines to much less developed nations and was competing with these big companies to get their product distributed. Even with these conservative numbers, that would yield $1 billion in revenue for a company with a market cap trading under $700 million. If we look at Moderna's profit margin over the last few quarters, it is in the mid-60s, so to be conservative, let's just say they do a 50% profit margin, even though that there's an argument to be made that unless manufacturing of their star mRNA is much more costly than Moderna's mRNA, Arcturus should have much better margins because their vaccine will be just 5 or 7.5 micrograms versus the 100 micrograms that Moderna's vaccines use. That will yield $500 million in earnings for a $650 million company. Let's say the market only gives Arcturus a 5 forward PE multiple, which is about half of Moderna's current forward PE multiple of 10. That would put Arcturus' valuation at about $2.5 billion, up about 3.8 times from where it is now. This multiple is drastically below where the market normally trades and would only persist if the market was not expecting Arcturus to be this profitable long term. They have a chance to shift this perception if they can sell COVID boosters, perhaps in tandem with a flu shot, and make that a recurring long-term business. That may force a dramatic multiple expansion that would only make our returns look more ridiculous. Now let's move on to my base case, which admittedly I still try to be pretty conservative, but a little bit more realistic because the numbers can get to be unbelievable pretty quickly. Let's say they just meet their guidance of having capacity for hundreds, plural, of millions of doses of production capacity and sell 200 million doses in 2022. Let's say they sell these for an average price of $17.50 a share so they can be cheaper than Pfizer and compete well in the overall market. That would mean they would do $3.5 billion in 2022 revenue. Let's say they get closer to Moderna's profit margin and about 60% drops down to the bottom line. That would be about $2.1 billion in profit. If you slap that same 5 PE multiple on there that we used in the bear case, that would point to a $10.5 billion valuation a year out from now for a company that is trading below $1 billion. And I don't even think that that's the ceiling of what could come for Arcturus if they really turn it around and execute next year with the vaccine business. Finally, the bull case. Let's say they sell 300 million doses, whether from production or their stockpile, and they sell these at an average price of $20 a dose. Now you might be thinking, why would they deserve more than the cost of Pfizer vaccine? And why would anybody select Arcturus at that price point? I would contend that it is a distinct possibility because their single-dose vaccine will be cheaper and easier to administer because patients don't have to come back for a second dose. This means you can either cut in half the amount of vaccination sites you need to set up and nurses you have to pay to administer the shots, or have the time required to vaccinate your entire population. This may not sound like much, but could be seriously important for poor countries with spread out populations who are already on tight budgets. 300 million doses at $20 a dose will be $6 billion in revenue. I moved the margins up to 65%, which is still less than Moderna's profit margin last quarter, and I arguably could have gone higher with the dose size being 13 to 20 times smaller in Arcturus' vaccines versus Moderna's. That would yield a profit of $3.9 billion. At the same PE multiple of 5, it would imply an insane $20 billion company, but I don't think that was even as bullish as I could have been. Now you may think that some of these valuations are especially high even for me, but I'd just like to remind you that there are already multiple mRNA vaccine companies trading for similar valuations in biotech and Moderna for about 40 and 60 $60 billion respectively. Arcturus could get to a $10 billion market cap, which would be over 15x from today, and would still be a fraction of the size of these companies. Moving on to this slide, where I will try to make an extremely conservative valuation model for 1 year out, with the 3 cases we just discussed, and a case where they do not get any vaccine production next year. Let's define that case now. I gave this no vaccine revenue case a $500 million valuation, because pre-COVID they were trading at a $250 million market cap. Since then, they have added cash via secondary offerings to extend the runway, added a flu program to their pipeline, had 2 years of advancement of their partnership programs, and had 2 years of advancement of their internal OTC and cystic fibrosis programs. But most of all, they have learned a wealth of knowledge from developing the COVID vaccine in the form of improved know-how to take a drug to market and conduct clinical trials, as well as in the form of improved technology demonstrated by how much better their second-gen COVID vaccine, ARCT-154, is compared to ARCT-021, their first-gen vaccine. I think all of this more than justifies a 2x in valuation from January of 2020, and to be conservative, I've put about a $500 million valuation on that outcome. Also to be conservative, I put a 50% chance of this happening. I personally rate this as closer to 20% of possibility, but just to be extra conservative, I put this at 50-50. And just to clarify, I would still hold my long-term position even if they do not rake in loads of cash from the vaccine, like they could next year. I still think that they can be successful and clear my rate of return with just their current and future programs, excluding the vaccine. Filling out the rest of this model, I gave a 35% chance of the bear case, 15% chance of the base case, and a 5% chance of the bull case. Another thing I did to be conservative for each of these cases is I used a 3 PE ratio rather than the 5 that we had mentioned as we were going through. If you multiply out each of these weighted probabilities, the implied end of 2022 valuation is $2 billion, which is about a 3x and 200% upwards from here. And like I said, probably somewhat annoyingly throughout, I tried to be as realistically conservative as possible. I hope you are starting to see why I'm pounding the table so hard on both of these stocks, and I can't wait to see it all play out going forward. As for what I've been doing, I've added to both of these positions in the last week by about 10% each. I would be adding more, but like I said, I'm pretty much out of money at this point and unable to do so. Thanks for watching. What do you think of both of these companies? Is Arcturus' vaccine going to make it into production? Is Lemonade going to keep plummeting, or the revenue stabilize them? Let me know in the comments below. And as always, I'd love to hear any bear cases made out as well. Keeps me honest and helps me learn. Don't forget to like and subscribe if you enjoyed the video. It really helps out the channel, and I'd love to have you along for the ride. Thanks again for watching, and have a great rest of your day.